So what's going on, guys? Here is a look at US 30. Now again, as I said last time, we broke this trend line here a little bit, but we did previously. For example, here we broke it slightly and then we rallied back to the previous highs. We fell lower again, and then we rallied all the way from there, which means if we take a look at the market now, I would use this support line as my stop loss. So we could see here the market going down here, continue maybe sideways, and then go back to these highs that we have already been retesting previously. So for now, this support line here is holding, which means if we add some more indicators, just a second, some of them are kind of useful. So usually when the MACD is pretty low at the US 30 and the stochastic as well, so here we have been pretty low here, and this happened a couple of times, and here, and now again the stochastic here is pretty low and the MACD as well. So usually when that happens, we see a turnaround. Now if we look back to here, when we broke this trend line here, and we saw the stochastic being low, and we suddenly saw a turnaround at around the MACD was slightly below zero, so it came to about 175. So this is the area that we are here now. Almost, we are now at 16110, which means that chances are we will here suddenly see a move to the upside, at least to this resistance line. So the trade would look really simple. I mean, I would, as always, wait for better confirmation. And so here we would only have a risk reward of 1.5. Maybe if you adjust the stop loss a little bit here, now it would be about 1.8. The thing is, however, when I'm trading US 30, I don't always necessarily look for a 1 to 2 risk reward ratio, although if we adjust here a little bit, we could turn it into 1 to 2. But sometimes I'm comfortable enough with 1.5 or even a 1 to 1 risk reward ratio when it comes to the US 30, which means because the chances are usually that we will go higher again, and we barely see the market going low. I mean, after all, the US 30 belongs to the indices, so usually it is going up. So this is why I always buy the pullbacks. And even if we see a loss here, it wouldn't be such a big deal because, as always, I only risk 1 to 3% of my portfolio. It depends, sometimes I might even risk 5%, but in general, for now, I keep it at around 3%. So the 4-hour chart here, well, doesn't tell us too much, but we are here getting constantly rejected from the 50 EMA and forming lower lows and lower highs. So we might here go lower again, but this is also where my entry point would be. If we take a look at the 1 hour chart, get rid of all those things here that we don't necessarily need for now. So here we got rejected a couple of times by the what is this, the 200 EMA, once, twice, 3 times, 4 times. If we add this one, maybe even 5 times. And this happened last time. It was here in June. We got here rejected a couple of times as well, although it was by the 50 EMA. So after that we saw here a bigger pullback, which means this could still happen, that we fall lower here and then suddenly rise back up like we did here. So for now I would still wait maybe until we see a potential crossover between the 250 EMA like we did here, and then go for a long position here. Where is it? With a stop loss at the 50 EMA at the lowest point and risk 1 to 2. And this is something that I would reconsider doing here as well. So once we see this crossover, again, stop loss at around 50 EMA and risk reward 1 to 2. Oops. Or you could even target the previous high, since chances are we might go higher. But for now, I would still wait for better confirmation. But this would be the trade and the analysis. So, thanks for watching.